You guys already know how I feel about Radix and how and why I think it's going to explode. I've made tons of videos on this, so I'm not going to get into it. I've also made a video on Radix ecosystem investments that I've been making, and today I'm adding another one to that list. So I've talked about why I've invested in Caviar9, OxySwap, DelphaBits, Photon, and I think it's one more, but it's not coming to me. But today we're going to be doing a full deep dive and showing a yield farming strategy that you can employ on a project called Gable Finance. So before we start, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video is for your education purposes only, and like we always say, do your own research, but use this channel as a starting point. So in this video, we're going to be doing a deep dive on Gable Finance. We're going to get into the yield farming strategy. We're going to talk about the tokenomics, what they do, what problem they're solving, who you can compare them to. And we're also going to go through the red flags. All right. So obviously I have to disclose this is a part of my portfolio, but a very, very small percentage. So without further ado, let's get into the content. So here we are on the docs for Gable. It says Gable is a decentralized liquidity market protocol built on Radix, where users can participate as borrowers or suppliers. Gable offers lending products for borrowers and liquidity solutions for suppliers. So Gable is kind of like Aave on Radix. They have their own node, their own node or validator for securing the Radix chain. So you can essentially supply and become like a node validator through Gable Finance, and then they get you like a liquid stake derivative token or LSU, and then you can stake that LSU and use that as collateral. It's almost like if Aave was running their own Ethereum node, to where you can stake Ethereum there, you get a token, and then you can double yield it. It's kind of cool, and they also have some cool things around flash loans. So we're gonna get into all those things here. So we're going to start with the supplier section. Gable's first liquidity pool was to utilize staking rewards as a means to collect liquidity. This innovative approach allows liquidity suppliers to leverage their asset twice. One, by staking and earning staking rewards, and two, by supplying the staking rewards and earning interest. So it talks about what staking is. We already know what staking is. It's just locking your tokens to a wallet to support the security in exchange for passive income. So we talk about here, liquidity collection via staking rewards is a novel and powerful mechanism that allows suppliers to stake their assets, Radix, to Gable's validator node and contributing the earned staking rewards to a liquidity pool. One of the significant benefits of participating in liquidity collection via staking rewards is the opportunity to earn passive income twice. One, on the Radix you stake, and subsequently two, on the rewards earned from staking. So it says, as a supplier, when you stake your assets to our validator node, you contribute to the consensus and validation process of the Radix network. In return for your contribution, you receive rewards in the form of additional tokens. The rewards you have earned from staking are contributed to Gable's liquidity pool, from which lending products are offered. The issuance of these lending products generate interest income that is distributed equally to the suppliers and Gable liquidity protocol. So like I said, it's cool. You get to essentially act as a validator and use those rewards as collateral, or not even collateral, because right now they allow you to take out flash loans for a super small fee, and flash loans don't require you to use any collateral, and we'll dive into that. And we're also going to do a platform walkthrough so you can see exactly how this looks, but it's different. You seeing some different things launch on Radix, and I think this project potentially has some promise. Let's get back into it. Now it talks about some of the risk here. It says, while staking your assets can be rewarding, it's important to assess the risks involved, such as market volatility, slashing risk. Slashing risk is basically like if you're a validator and you approve something that everyone else doesn't approve, and that's usually something false because everyone has financial incentive. If you do that, your rewards will get slashed and maybe even some of your staking. I'm not exactly sure how that works on Radix. And then it says, and falling out of the top validators entitled to the rewards. Right now they are one of the top, and they're saying if they fall out, that could decrease the staking rewards. Second thing, by staking your assets to our validator node, you commit to a certain lockup period during which your assets will be inaccessible for other purposes. This lockup period on Radix is generally around 1 week, but can vary depending upon the protocol and rules. The next point is staking rewards are gathered by the validator owner and subsequently deposited into the liquidity pool on behalf of the stakers. However, there is an additional waiting period of approximately 1 month or 4 weeks that validator owners must endure. This results in a 4-week delay between the issuance of staking rewards and their actual deposit into the liquidity pool. Once this initial 4-week period is surpassed, rewards will be continuously added to the pool. This arrangement carries several implications. One, during the first 4 weeks, no rewards will be available in the liquidity pool. This may impact early adopters, and to address this, compensation will be provided to this group of users in the form of Gable token airdrops. That's pretty cool. After this initial period, rewards will be consistently accrued in the pool. Two, structurally, as a stream of income rewards is established, new users will receive rewards that were issued 4 weeks prior to their onboarding. In essence, the rewards they collect will be offset by a 4-week window. The significance of this offset depends on the fluctuations in two key factors. One, the APY, and the number of stakers participating at Gable within that 4-week window. It's worth noting that rapid changes in both of these factors are unlikely in practice. And they say it's also important to note that while you may lose compounding effect on staking rewards, you will gain compounding effect from the liquidity pool. Remember, staking is for the validators, and the liquidity pool is supplying that liquid stake token to the pool. Participants who contribute liquidity will receive a share of interest earnings generated by the protocol's activities, real yield, which I believe is going to be another part of the big narrative, so they're hitting that. That's good. These interest earnings can provide their own potential for compounding. The proposition of Gable is that the income from the liquidity pool should exceed the income from compounding rewards. Next, let's go to the payout scheme here, so you know how to expect the payments if you were to decide to do the strategy that I'm going to show you here in a bit. Gable Validator Node charges a 100% fee on staking rewards earned by participants. However, instead of keeping this fee, the protocol facilitates the direct deposit of staking rewards into the liquidity pool. As a result, the effective staking fee for suppliers becomes 0%, as they can retrieve their staking rewards from the liquidity pool. This setup enables suppliers to participate in the staking process without incurring any direct fees, allowing them to fully benefit from the rewards generated by their stake assets. Now, interest earnings. They talk about how Gable earns money. So it says Gable generates revenue through the issuance of lending products to borrowers. The funds for these products are financed by the staking rewards contributed by our supplier. The interest earnings generated from the lending activities are then divided equally between the suppliers and the protocol. This table shows the earnings composition. So staking rewards, the supplier gets 100, Gable gets 0. So essentially for the validating it to be a validator. But as far as the interest earnings, they get 50%. The supplier gets 50%, Gable gets 50%. All right, next, let's talk about flash loans. And I'm not going to go super deep into this, a lot of information on it. And, if you're interested in this, I encourage you to come read the docs on your own if you want to deploy a strategy, but we're going to look at it from a high level. So flash loans offer users the ability to borrow a significant amount of funds without requiring any collateral. These loans are executed and settled within a single transaction on the blockchain, providing near instant access to capital. And this is the main feature offered at Gable right now. The key characteristic of a flash loan is that it must be repaid within the same transaction in which it was borrowed. So it's like if you look at a blockchain, each block contains information, and then there's a chain connected to it after the consensus mechanism is met, then the whole thing happens over again. So it's saying before a next block is formed, it has to be paid or it won't be included in that block. This was pioneered by Aave. So it talks about the process of getting a flash loan. The borrower initiates a flash loan by interacting with the smart contract, and it says the amount of Radix that they want to borrow. Then they have to get it approved. Then once it's approved, a transient NFT token is provided. And this is a token that can't be withdrawn or deposited into any wallet. It can be minted, burned, but not deposited or withdrawn. The borrower is allowed to utilize the loan amount for various purposes within the transaction, and we're going to get into some of those purposes. It can include arbitrage opportunity, collateral swapping, or other types of DeFi operations. In terms of repayment goals, the borrower must repay the flash loan amount, including the interest rate, along with the transient token by the end of the transaction. If the loan's conditions are met, the smart contract will burn the transient token so that the transaction can succeed. Failure to meet the loan's condition will withhold the transient token to be burned, resulting in the automatic reversal of the loan, canceling the transaction, and returning the borrowed funds to the lender. So now it just talks about some of the use case, arbitrage, liquidity provision. Let's say you're going to get liquidated and your loan to value ratio is getting really, really low, and you don't want to lose that money. You can take out a flash loan on Aave, use that money you borrowed to pay off the loan, you get your collateral back, and then you use some money from the collateral to pay off the loan, so that way you never get liquidated. Collateral swaps, capital efficient trading, protocol interactions, and then they have like a user manual that, you know, it pretty much shows you how to do everything, right? So if you want to go through these, feel free. It tells you how to execute it, even how to automate it, and then it gives you some advanced strategies, which is pretty cool. So they got flash loan chaining, derivatives, algorithmic trading with flash loans, leverage yield farming. That's kind of the example that I talked about. Flash loan debt cycling. Yeah, so it's pretty cool stuff. If you guys should definitely go through this. It even gives you like best practices and what to avoid. So this flash loans seems like their bread and butter. And you know, we got some cool things being built on Radix. So now that we did that, let's go through like a little platform walkthrough. So it says right now the liquidity is 355 XRD, which is Radix. And you know, it pretty much tells you all the things that they did on the docs. They got their validator note, liquidity pool, flash loans, white paper, which we kind of just went through. Let's look at how the platform, you know, kind of functions. So if you go to the dashboard, it gives you all the data here. And this is the costs for taking out a flash loan. It gives you all the metrics that they've been having, and they've been growing, as we're gonna kind of go through here. If you go on supply, remember you have to stake your Radix to the validator node. And I talked about like the time length, so you want to be aware of that. But right now, the APY is 38.9% single side staking on Radix. So I'm personally not doing this strategy just because I feel like Radix can pop it any day. I made a video on Caviar 9 and how I'm getting over 235% APY on Radix and USDC. I prefer that strategy because while it is a little less risky from a logical standpoint, I'm making more money and it's liquid. So I'd rather trade that. A bird in your hand is worth more than two birds in a bush. So remember here, going back to this, you have to stake here, you know, make money from the validator. Then you get your LSU token and you can stake here to provide liquidity for people to use to borrow. So now let's go through their smart contract audit. They got a perfect 10 out of 10 score by hacking.io. And I checked their Twitter. They have almost 100,000 followers. They seem pretty legit. So if you go through here, this is what I like to see here. They have one audit where they had some points that they had to fix, right? And then they brought it back and they fixed everything. This shows that they care. I'm not sure how much this audit costs, but traditionally these audits aren't cheap. So they seem pretty serious about, you know, getting this project off the ground. Now let's go to DeFi Llama. So you can see Radix has $16 million in total value locked. If you look at the protocols, you have Caviar 9, which is the top one. Just made a video on them. Swap, DeFi Plaza, and Gable Finance is actually number 4 with 100. Now this, if you hover on this, it says this protocol deposits into another protocol or is under liquid staking category. So it's subtracted by the total TVL because both liquid staking and double count toggles are off. So I don't know, maybe if you want to say this is half of this. So like, let's say if it's 400,000, it's higher than Weft and Astrolescent. So yeah, we'll see if they continue to grow. Now let's kind of look at their Twitter and go through some things here. So right now they have 1,700 followers, not a lot right now. So that's one thing. These are some of the milestones that they achieved in their first month of Gable version 1. They onboarded over 600 supply and accounts, reached $1 million in TVL, got over 35 million in staked Radix, issued $200 million in Radix flash loans, and distributed 20 million Gabe tokens to 600 plus accounts. And that's not bad for 1 month. You have the founder jumping on spaces with other projects in the space, so he's public. That's also good to know. He's not trying to hide. They were also a grant receiver by Radix, so that shows that the Radix team somewhat believes in them. And November 1st, they tweeted, the Gable validator node entered the top 100 validators in less than 36 hours after being live. So that's good. And then also I scrolled all the way to the bottom just to see how long they've been tweeting, to see how serious they are, to see if this is, you know, just like a pump and dump kind of project. And they've been at it at least since June. I don't know how long they've been building it, but they've been active on Twitter since June 18th. That's half of a year. Was not a lot of results, so that shows me that they're serious about this project. Next, if you look at their Telegram, they have 427 members. The founder is pretty active in there, so that's pretty good. It's not a hell of a whole lot, but it's better than nothing. And it seems like people are communicating in there every day. Their Discord isn't as active as you can see here. They said something yesterday, but then before that, November 25th, before Thanksgiving. Today is December 10th or 11th. But at least they're active in Telegram. Now let's go into the tokenomics. So it says the utility of the token is suppliers may gain access to enhanced rewards, reduced fees, or exclusive features, while borrowers can enjoy discounted interest rates or access to a wider range of lending options. This utility token will play a crucial role in further incentivizing engagement and usage on our platform. And it gives you the allocations. So 55% went to the community, which is good. 20% to the team. It's kind of a lot. 15% to operations, which is still technically the team, but I guess used for business ventures and not, a direct payout. Who knows if they'll actually do that? And then the remaining 10% went to investors. And also it says at Genesis, 1 million Gate will be minted, which will become available over an approximate 4.5-year period. So they do have a vesting schedule. And it also says to ensure the long-term health and sustainability of the ecosystem, they're introducing a perpetual inflation rate of 1% per year. I've seen a lot more, so this isn't too bad. Sometimes you need to, issue money so you can pay people who are active within the protocol. And also, you can go on their Medium. They have a few articles that they wrote. This one is pretty much the same thing that's on the About Us section. Now, let's kind of go into some of the red flags that I have for this project. So if you go on the website and you scroll to the About section and you click Team, it just shows one person here. And, his credentials seem pretty cool, but he didn't link any, LinkedIn's or Twitter. Well, he is on Twitter. You can go and find him on Twitter, but, who knows if these interests are actually legit. As an investor, you kind of have to be a little skeptical, and I have nothing against this project. It seems really promising. I think they are actually pushing to make it successful, but you have to look at these things so you can have proper risk management. It says Gable is looking for new team members. If you have experience in smart contract or front-end development, reach out. So it might just be this one guy here, and you need a team. It doesn't matter how good a project is. If you don't have a team, you're not going to go too far. They say if you want to go fast, go alone. If you want to go far, go together. So I'm hoping that they can kind of expand their team, or maybe it's just more people on here that isn't being shown. I asked in the Telegram and I'm still waiting to hear back. All right, so now that we went through all the fundamentals, let's conduct some technical analysis. I'll let you guys know my strategy for buying, and you guys can determine if it's a good idea for you and your portfolio. All right, so when I go to check prices, I go to OxySwap, I hit market. It gives you all the tokens in order in terms of market cap. As you can see, there's a big sell-off here. It gives you the market cap as well. If you scroll all the way down to the bottom, Gable Finance is literally the last one. I don't even know what the market cap of this token is. I know it's extremely, extremely small, but let's click on it. This is Gable Finance on the daily chart. As you can see, it's pretty much at the all-time low levels or near it. From bottom to top, it's already pumped around 10,000%. And from where it is right now, just to get back to previous all-time highs, is a 484% increase, which isn't too bad. So right now, it's at least you have it at severely bottom levels. And what's important to keep in mind, this project is really risky. It has maybe one team member. They just got their audit passed. It's their first month in operations. They've been active since around June. So when you take all that into account, I did invest into this project, but the amount that I invested represents less than 0.5% of my overall portfolio. I think it's an asymmetric opportunity. I think as the Radix ecosystem grows, a lot of projects without fundamentals are going to grow. It's already proven that a flash loan project can work and is valued. Borrowing and lending is on every chain. Aave may come to Radix, I'm not sure, but I do feel like this token does have an opportunity to pump, especially since they're doing the whole validator thing. I feel like that's a new and novel thing to do that I haven't seen yet. So yeah, I invested a super, super small amount. So take all that into account. Go and read the docs, do your own research like we say. But if you got value from this video, I ask that you drop a like, comment, consider subscribing. Also, if you want to learn how to find projects like these, how to find the highest yielding, how to become a yield farming professional, learn how to trade options, the whole idea is to be investment agnostic and be able to intelligently go wherever the opportunities lie. And we have courses around all kind of investment assets except real estate. But the barriers to entry in real estate are high anyway. So schedule a free strategy session with me in the calendar link in the description. I thank you so much for watching. Let me know what project you want me to cover next. And until the next time, I'll see you guys in the next video. Take care.